Guys, listen, it's been over a month, right? I've been talking about this stealth bear market. Well, let's face it bubbled up to the surface today, and it was ugly. The Dow fell below 17,000 and closed at a new 2015 low. And as painful as it is, it looks like the bottom, well, I like bottoms to be reached swiftly, but the question is, have we gotten there? Because right now, to me, this feels like it's been mostly emotional, not fundamental. Also, of course, this is mostly Wall Street whining. Therefore, I'm licking my chops. I'm not ready to pull the trigger yet, but I think we're getting there. I want to ask the other investment pros what they're thinking. Steve Cortes, BGC partners trader and senior strategist, and Dan Shaffer, Shaffer Asset Management president and CEO. All right, hey, Steve, I'll start with you. You've been cautious. You've been sort of talking about something like this happening. It was climactic. We sold off hard into the close. Is this the kind of sell-off you've been looking for?
You know, Charles, it is. And I would say this, as far as global growth, I think it's in a free fall. So if you're a global investor, and most people are, whether you know it or not, if you're not scared, to quote Yoda, you will be. Global growth is a real problem. Now, having said that, I think there are opportunities here. And I would tell you this, as a more tactical guy, the fact that when there's crying, I'm buying. There's a lot of crying right now. There's a lot of angst, a lot of worrying. So I do think there are bargains out there right now. And I think this is actually a time to not be selling. I think that time was several weeks ago. This is a time to be buying.
Here's the thing, though, Dan. We're not sure. We can't pin it on one thing, right? In other words, we had the Federal Reserve meeting yesterday. Initially, going through the statement, it felt like, hey, the Fed's not going to hike rates. We came off a 230-point drubbing, actually peaked into the green for a moment before getting smacked down again. At the end of the day, it was a complete sell-off. My feeling is, when I've seen this in the past, it's Wall Street's way of trying to manipulate the Fed. In other words, we're going to have a hissy fit. We're going to sell off until you come in there and you help us out.
Yeah, they're looking, it's like talking to the Fed. They're trying to get the Fed to do something positive for the market again. And I think that the Fed's out of bullets. I don't know what else they could do. And for the last 6 months, 8 months, they're talking about raising rates, which I think is impossible for them to do. The problem is that it's not just isolated to our central bank. All the central banks around the world now are panicking, and people are starting to realize that. And top-line sales are not meeting expectations. This is a problem.
When they're all panicking, they all also, you think, have all run out of weapons or arrows in their quivers. I mean, they've used every kind of gimmick in the book, and they've invented a few new ones.
Well, the one they're using now, I mean, Vietnam, Kazakhstan, China, they're devaluating their currencies. This is a very dangerous thing. When you devaluate currency, you affect the global structure of finance, and that's what they're doing. So the uncertainty is actually growing by all these countries trying to get to the bottom line of trying to get flow into their countries by lowering currency valuations.
But, here's the thing, though, too, Steve. I mean, from time to time, we've got to deal with this. Let's face it, everyone has gotten spoiled. I don't think people would believe it, but coming into the week, this deep into a year, we have never had this narrow of a trading range. It's been pretty narrow. We just went negative today, but coming in, we only had a 6% trading range for the entire year. It feels a lot worse than that.
No, and Charles, that's an important point. Basically the S&P has been from this 2,050 to 2125 roughly range all year long. And you're right, it is the quietest year ever. So that's important to realize. And by the way, we tend to get euphoric at those highs at 2,125, and then we tend to get despondent around these lows in the neighborhood of 2,040, 2,050. And by the way, neither is the correct response. You should be cautious at the highs, and you should be a little bit greedy here at lows. So I've been very negative on the market, mostly correct. I'm starting to get pretty interested here. I think there are some bargains here. By the way, one of the reasons, I'm not saying they should, but I think the Fed will ride to the rescue again by sitting on their hands.
How
the Fed
doing nothing
just by sitting on their hands, by doing nothing,
doing nothing, out there.
And the bond market is starting to agree with me, and now the currency market is starting to agree with me with the dollar going down. The Fed, in my view, does nothing in September. I think they do nothing in December either. They can't with the world in as bad a shape as it is. The U.S. is doing okay. The world is not okay.
All right,
internationally.
I want to ask Dan about this. Then who is in control of this market right now? I feel a little bit today that Janet Yellen in the last 24 hours lost complete control. The little that she actually had left. Maybe she signaled to the market, I'll keep the punch bowl out there to the degree I can. But then there's a credibility issue, Dan, because to your point, they've been promising a rate hike. I don't know why. I don't see what on her dashboard is so great that she's got to raise rates, but she's been promising it. So who is in control of this? Did the market take back control with this hissy fit?
I think the market's going to take control. Remember, Janet Yellen, and if you watch her body language when she speaks and you hear what she's talking about, she really is talking that she has no clue really what to do. And this jawboning that the Fed does to talk about increasing rates is to make us think that things are better. But they're really not. If you show me...
What if you looked at housing? Someone would say, okay, housing is looking really good right now. I mean, almost everything on housing looks pretty good right now.
Relatively speaking. I believe it's going to peak in September.
We're at multi-year highs.
And I think that's ending here.
We're starting to see some refinancing activity. We're starting to see some mortgage activity.
But wait a minute. Velocity of money has collapsed. So money is not moving. Forget the housing market for a second. Money is not exchanging hands. Wages are not going up.
The Fed,
Debt is increasing.
I don't think the Fed, Steve, I don't think the Fed can do anything about that. I mean, the other side of this equation is we've got fiscal policy from a White House that just is adamant against success, adamant against capitalism.
Right.
They've raised rates. They've flooded the country with regulations. How can money change hands when you've got that many barriers?
Right. And, Charles, I couldn't agree more. Monetary policy really is not at the crux of the problem here, even though I don't like a lot of things the Fed has done and is doing now. It's a matter of policy. And, by the way, it's not a matter of government that government creates growth. It never has and it never will. But it can sure get in the way of growth. And right now, the government gets in the way of growth every chance it gets through taxes and regulation. But that is going to change in 2016. I am very confident on that. That's why longer term, I'm very bullish on U.S. growth. Right now, though, global growth still really scares me.